fave NuCor, the best steel maker in America and arguably the world. It's a key investment club charitable trust holding. Here's a stock that's up 86% for the year, but still down nearly $30 from its August highs. At these levels, NuCor is selling for a very odd 4.5 times this year's earnings estimates because Wall Street's worried about supply chain issues for NuCor's customers, slowing demand from China thanks to the real estate crisis, and, of course, more capacity coming on. We know NuCor's been doing very well, but a lot of investors think this is as good as it gets. However, less than 3 weeks ago, the company announced that it will spend nearly $3 billion building a new state-of-the-art steel mill somewhere in Ohio, Pennsylvania, or West Virginia. That's not something you do unless you're very confident in the future. And I think NuCor understands this business better than Wall Street does. But don't take it from me. Let's dig in with Leon Topalian. He is the president and CEO of NuCor. Mr. Topalian, welcome back to Mad Money.
Thank you, Jim. Appreciate you having me today.
All right, so, Leon, one of the things that I want to just get off the table first, there was a downgrade yesterday. Basically, it was things are as good as they can get. But we have seen cycles that last for a very long time, big steel cycles, and they don't get as good as they get as soon as some of these naysayers are. The history of NuCor is for much longer cycles, isn't it?
Absolutely, Jim. And again, through the cycles over the last 25 years, typically when we see this, it lasts 1, 2, 3 years. However, I would tell you it's not just a market cycle that I'm excited about and would tell you and your viewers our best days are absolutely in front of us. The investments that you just pointed to, our launch of a conic, which is a family of net zero products, our cash position, and really the confidence and relationships we've built with our shareholders. You know, Jim, at the end of the day, the green and digital economies are going to be built on steel. Who better to do it with than one of the cleanest steel makers on the planet?
You talked about this new greenfield sheet mill. That has been used against you by some analysts I talked to who are saying, okay, here they go again. They're putting up capacity. That always leads to the end of the cycle. I think, given one, that how much stock you bought back in the hundreds, but second, the fact that you've had a better handle on what's needed and what's not, the idea that this greenfield steel mill is going to somehow overwhelm steel pricing, to me, seems fanciful.
Yeah, look, our greatest return metrics are our organic growth projects. I couldn't be more excited about the new announcement of our sheet mill. And Jim, it's not about getting bigger by volume. It's getting bigger or adding our capability to serve our customer base. This mill is going to target high-end automotive customers and the entire portfolio of moving up that value chain. So this is going to be a differentiator, and we believe have a unique opportunity to serve that market with the cleanest steels in the world.
Well, let's talk clean. We have been adamant on Mad Money that companies have to take the earth as a stakeholder. When I look at this new product, a line of products you had, net zero steel products, and when I know that you use scrap steel, you have to be one of the most ecologically important leaders in manufacturing in the world.
Yeah, without a doubt. And our carbon footprint is about 1/5 the integrated world average today. And we've made a commitment by 2030 to reduce that by an additional 35%. So the launch that we announced this week to provide the first net zero steels at scale and partnering with General Motors is an incredibly important first step in that partnership. And I couldn't be more excited for General Motors as well as our additional customers that are going to require this to meet their net zero goals for their customers.
Yeah, I'm glad you talked about that because, you know, when I spoke to Mary Barra yesterday, it's very clear she needs companies like NuCor deliver on their end if she's going to meet her targets. And given the fact that you use scrap and given the fact that you have been very thoughtful about what should go into a plant, it is a way for her to be able to meet her goals.
Absolutely, and we're really excited about that. As you know, we're the first EAF producer to receive the GM Supplier of the Year award. We've now done that back-to-back years. The partnership is great, but also, Jim, that's going to spread. That's not just the auto industry. Many of our customers are calling and asking for these steels today, and that is a key differentiator for NuCor to be able to do that. Our investments in the virtual power purchase agreements really provide a unique backdrop for NuCor to bring value to our customers and to our shareholders.
All right, so my Chapel Trust owns it, and one of the things that I've been saying to people is, look, you may see it at 4.5 times earnings, and therefore must think that the future earnings, that the earnings have to fall apart. There have been a lot of times where it's been the opposite, though. There's been a lot of times when people have been saying, you know what, $20 goes to $10 for NuCor, and it turns out it goes to 22 or 23. Isn't it possible if business stays strong that instead of your earnings being cut in half, they actually may be bigger next year?
Yeah, without a doubt. And Jim, again, we announced last quarter that we anticipate this quarter to be a record, and you'll see in a couple weeks where that comes out. But the future for NuCor is incredibly bright. The investments we're making today are strategic, long-term investments. And again, I believe our best days are in front of us.
How does NuCor stack up ecologically versus the newest and best Chinese plants?
You know, again, Jim, we're about 1/5 of the global average, and so typically we're you know, a quarter to a fifth better than the average integrated producer in the world. And so NuCor, compared to places like China, there is no comparison. We are light years in front of them.
That's important because we have so much money going to ESG funds. I can't think of another industrial or, yeah, well, of course, no steel company that could measure up and be in any of those funds. Are you getting calls from some of those funds to check to see what your ratios are?
Yeah, absolutely. And we're getting calls from our customers. With the launch of a conic, this is going to move rapidly through the business. To your point, and it's the right one, our customers, like General Motors and many others in the OEMs of automotive, need net zero steel supply chain to come into their supply to meet their goals within their company. So again, NuCor is really well positioned. Our new mill somewhere in the Midwest is going to be poised to be able to continue to serve that. And again, Jim, there's a fundamental structural shift in our industry. The supply and demand side of this, supply side, is very different than it was two or 3 years ago. And so again, that's a position that's going to give us strength, as well as the trade position is very different than it was 3, 4, 5 years ago, much stronger. And it's not because of 232. It's because we've won long-term trade cases that stay in place for 5 years. So even if 232 goes away, NuCor is well positioned. And the industry in the United States is so much better positioned than we were just 5 years ago.
Well, thank you. This is what I wanted to hear. It's why the trust owns it. It's why we've been telling club members this is the one to own. Great opportunity. Leon, thank you so much for coming back to Mad Money.
Thanks so much, Jim. Appreciate it.
It's Leon Topal.